Hello, good afternoon, YouTube. It is the 3rd of August. August typically a pretty quiet month for markets, but as we were mentioning in our Zooms yesterday morning, yesterday afternoon, and this morning, things have been pretty loud the last couple of days, given the downgrade by Fitch for the US. It was not expected, I wouldn't say. So yeah, very much a little shakedown for the markets that we've seen over the last couple of days. I've not got off the floor too much yet. I can drag the charts down here so you can get a better view. Let's take a look at the S&P 500 as a gauge for the broader US markets. You can see we're not far off the floor. We got that news out after the close on the 1st of August. Gap down, didn't manage to close the gap, and then yeah, pretty punishing day yesterday. Got a tiny bit of respite in the futures in the early hours of this morning, but yeah, as the Europe opened, we got more softness, and yeah, not too far off those lows again. So quite a decline so far. Those of you who are on our following our Instagram channel will know that we mentioned this on there. We've seen, I think it's about 5 to 7% fall in a single day last time we had a downgrade for the US. So that was in the by Standard and Poor's, a different ratings agency. Interesting what Moody's do next, but that led in 2011 to a 5 to 7% decline in the market in a single day. Didn't quite get that yesterday, but we might get slow unwinding. We mentioned this a little bit before. We've been in the equity markets have been in a kind of Goldilocks scenario, right? We've been seeing inflation coming in lower, job markets remain robust, earnings, yeah, they've been pretty decent, I would say, on the whole, not too bad. So yeah, this hasn't been a particularly horrible place for equity markets, and that's kind of reflected in these higher prices that we've seen. But finally, we had a catalyst that broke the back of it a little bit, and that big selling here. You can see the amount of volume. We haven't had too much volume around of late, but this was one of the bigger volume days yesterday. Interesting to see if this will be a continued washout in stocks, or whether they can absorb some of the blow already. We are looking. I mean, I've got an eye a little bit lower to see if we can kind of very low on volume here. It might go back and try and hunt some liquidity around the 87s. Bear in mind, this is the futures contract, slight differential in price from spot prices. Some of you will be trading on some of those CFD brokers, or find this other high volume where we had a lot of trade done in the end of June, early July. We sprung off this, as you'll see, in the early July period as well, before this kind of strong rally into the end of the month, really. So yeah, let's see how far this goes. Plenty of reasons to be slightly more pessimistic than perhaps we were going into August. August is a pretty bad month, historically the worst for the stock market. So that coupled with some hair-raising news is worthy of note. What we've seen in the dollar, has that gone down too, right? Because the dollar is doesn't do well. Well, if it's downgraded, that can't be good news, right? Wrong. The dollar has been accelerating its strength. So this is against the pound, right? So this chart down is dollar strength relative to the pound. We have a look at it versus the Aussie. Similar sort of story. This is not just a pound story. If you look at it against the yen, a few more things going on in with the yen, but we have had relative strength from this, albeit we're kind of back to where we came from on the yen. The yen's got its own stories going on a little bit at the moment. So yeah, interesting to see the dollar strengthen on this sort of news. But it is a safe haven currency, so not too much of a surprise from that perspective. What else have we had out today? So let's talk about the data. So we had the Bank of England monetary policy report. So we had the official bank rate, 5.25. I mean, it says here, as expected, there was some views, pretty strong views, that we might get a 50 basis point hike, but we only got the 25 hike. This initially led to some softness, but that was very quickly bought up by the market. If we take a stronger look at cable, we'll get a better view of the relative chop we had. It's not really breaking too far out of anywhere, right? We're just moving since the 12 o'clock release, that initial weakness. Then we kind of rallied up to value highs, down to value lows, up to value highs, just around the point of control now. So yeah, what has changed? Sweet FA, we're right where we were before the number came out. So in line with expectations. That not too much given away in the press conference if you managed to follow that. So yeah, as we were on the cable rate. Other news we've got coming out later, though, is the ISM Services PMI. We already had the manufacturing out. The services, or as some people call it, the non-manufacturing numbers, are the third biggest release for volatility in markets. So this could be something that moves the market quite nicely. We did have unemployment claims out earlier, but this was pretty much bang in line. Interestingly, we had quite a strange move on this. If you want time to take you through this, and that was out at 1:30 today. If I look at like a 30-second chart on gold, show you the kind of madness that we had out of this. This news, I can tell you here, it was out after. Let me do a 5-second chart. This news dropped on Reuters at 12 seconds past, and if I can scroll back, you'll be able to see that we had a big move up, bang on the time. The news hadn't been released. By the time the news came out at 12 seconds past in this candle here, and it was revealed that this number was in line with expectations, what happened? All of this rally, which was no mean feat, by the way, where we were here to the highs. You know, you see $5 up in gold. I wouldn't sniff at that myself. Then seeing the market pull all the way back and go back to those levels again, as the reality of the basically inline data came through. So sometimes I know we trade and we talk a lot about beats and misses and trading for big moves, but sometimes you can fade moves if moves occur and you feel they shouldn't. Perhaps it was just a liquidity grab, and this was obviously up into the point of control for the day. Classic area of high liquidity. Very easy to get yourself some exposure to the market around those sort of levels. And an unusual move, not one that you want to be using with kind of stop orders, I don't think, because we had that liquidity grab lower as well as it came out before it went higher, so it's ran any stops that are here. Pretty ugly action for those of you who are trying to chase price action, but when you see the reality of the figures, not really too much to get carried away with there. So very unusual action from us there. We are, we're talking about unemployment claims. We had ADP figures yesterday, JOLTS the day before. That means we've got non-farm payroll figures tomorrow. So around 1:30 tomorrow, we're going to have some big old numbers coming through. Do bear in mind, we have big volatility. This is, I mentioned the ISM being the third biggest proponent of volatility in the stock markets. Well, this non-farm payrolls or the employment report, along with the average hourly earnings and the unemployment rate, is the biggest single volatility injection for markets. So be prepared for this. Not always the easiest day to trade, nor are most Fridays, but jobs are very much in focus these days. And until that softens, there's still views that interest rates will be higher for longer, as we've heard for some time. So let's have a look at these stock markets on a big picture, because I know a lot of you are interested in where we are with the S&Ps. I'll look at it on a few different scales for you, so you can get a feel for what's happening. Let's look at it firstly on a daily. Very bloated, as we've seen, very high levels. We talked about these potential targets on the liquidity lower. Looks pretty heavy as we're getting into the open. If I just zoom out onto a 5-minute chart, you'll see that we're kind of nudging down towards these lows right into the open. This has tended to be pretty nasty for markets. We had exactly the same sort of thing this morning, I think, on DAX. Pretty weak, a bit of weakness at 750, 755. So that kind of softness into the open led to really aggressive selling on the open. We might see something similar. The only headwind, I would say, or kind of would be tailwind, strength for underneath, is we have a lot of orders under here, right? We've got the, and they're not huge, but we've got some where we are now at 12, as we say 02, so the next 10 ticks, there's a lot of potential buy orders in the book. There's not a lot of potential sell orders, so I'm probably not going to commit on the open to this, but we have seen some big softness in the Dow. Staring at another screen here, if we look at the Dow, this is probably selling off with even a larger degree. So let's see if that one follows through, because that one looks very ugly so far. I'd be surprised if it doesn't at least have a look at this swing low. We tend to get a lot of stop runs at this time of the year. So being so close to the low of the day could be attractive. We put some liquidity for anyone who's clinging on to longs. I doubt the market's going to be especially long at the moment, given the news. The NASDAQ here, this one seems to be of strength as well on the open. Decent start. Again, these value areas coming in pretty handy. We're up a good 25 ticks or so in the first 40 seconds of trade. Back to the bigger picture on the S&P. These value areas again coming in handy with the value highs, providing resistance, a little push through before it shifted again. And then we got this rollover down to the value lows. Yeah, I'm curious to see how we react around today. I think this could be a decisive day on to whether this is one and done in terms of washouts for stocks yesterday, or if this is the start of something slightly more meaningful. Yeah, this is a Thursday as well, don't forget. So this tends to be the best day for us traders. Tend to make the most money on Thursdays vis-a-vis any other day. So yeah, I would expect to see some decent action throughout the fall, even if it is August, right? We're not here to bang the drum of over trading in this month, but when you do get some news like this, it is a bit of a gift, and this is probably the window the next few days to try and capitalize on some volatility. If things do settle down into next week, then maybe it's worth hanging the mouse up for the remainder of the month and going do something in the what should hopefully be the sun if we ever see it again. Back to the broader markets. Let me take you back to the Dow, since we were looking at that one before. That jumped up from value low to the point of control. Just grabbed some liquidity early doors, looking softer again. I can show you the order flow quickly on the S&P. Have tried strength, but it has not continued. We are now at lows for, well, certainly since 2:30. Are we going to just gobble up these orders today? It's looking like there's still plenty of weakness out there. For now, I'd be curious. I really want to see these numbers taken out before I could really commit short, I'd say. There's decent buying options here, but it doesn't look like they're going to be tested. And the Dow, yeah, down to lows as well. So yeah, looking pretty soft. So is it going to be a case of snaring shorts again, as it was yesterday? It was really trying your best to be short on any opportunity yesterday. It really didn't matter where you got short until we were going home at 5 o'clock. That was a nice time to be getting out. So yeah, good opportunities around ISM at 3. So we're not too far away from that. I'm probably going to stick tight until 3 o'clock. Wait for that number to come and go. If it is something that's going to push these markets lower, then that might be a catalyst to get this another decent leg down. So, trade smart out there, and we'll be back with you on Zooms tomorrow morning, and probably do a live one. If you want to sign up for that, by the way, the link to do so is below the video. So follow the instructions there, and we'll take you on. Right.